Good evening, all. Ira Epstein of Linn Associates with your metal market update for this Tuesday, the 16th of March, 2021, 5:55 p.m. Central Time. Tomorrow's going to be an important day because we get the Fed coming out at 1 o'clock p.m. Central Time with their monetary policy statement, the press conference at 1:30. The questions will be certainly about the curve yield, what the Fed's doing, where the dot plot might go. Part of that's going to also be the Fed answering what do they think of the fact that now we got a $1.9 trillion package out there. Checks are in the mail to people. Unemployment, while the Fed thinks it's at 10%, we know that money's going out now to small businesses and the like, where they're going to be able to call back staff. With the COVID vaccine being passed out as it is in America, we're seeing restaurants open in many places to 25% or more capacity now. So there's changes afoot, big ones since the last meeting. What the Fed should do, though, is update us on their thoughts from December before all this happened. There's a lot that has happened, and I think that's what we're entitled to know. What are the Fed's thoughts? So we'll all look at the dot plot, assuming they update everything. We'll find that out tomorrow. How do you go through reports like that? Well, they can be very unhealthy. In other words, they can be full of surprises. In the futures market, I often tell my traders, don't go through them. The futures market always has another train stop. In other words, there's always something going on. It's very hard to do that if you're trading in the stock market. We know that. I'm just telling you what I can do and where I do it in my charting course and what I can do and where I do it in these videos. Got it? So given the opportunity, that's the way I prefer. And then it's like, ring the bell, let's start again. Hope that makes sense to you. But I've discovered stops really don't work when those algorithms take over the market if the Fed does something the market didn't expect. It moves like a lightning bolt. Okay, so let's look at gold on a weekly basis. It's up $10. It's getting a bit of a bounce, but there's nothing on this chart that's changing at this point that the bias remains down. When we go to a daily bar chart, we've had a bounce off these lows. The market's had a bit of a rally, and the swing line has changed. With market getting up today to 1740.50, we made a higher high. This low is certainly higher than wherever this low is. The swing line low is here, but you made a lower low than it. And where this whole rally began was right here, very frankly. You had an outside day down. My rule of thumb is when you have an outside day down and you take it out, unless you go back under that day's low, you will make an attempt to get to the closest main moving average or a Bollinger Band, the closest of it. Well, in this case, it's not going to be a Bollinger Band, as you'll get to see in a moment here, but this was the run today. So where are the moving averages? Ta-da! What do I call the red line, the 18-day moving average of closes? In unison, the line in the sand. So all the market did is rally back up to that number, couldn't stay above it. You're back into neutral territory. Why? Because you've got the swing line up, but the bias is down. I define bias by being where the market is in relation to the 18-day average of closes. For those of you that go on some of the websites, I had somebody write me on Talk Markets, very interesting. And he said, well, Ira, I'm not calling what I think this market's going to do here. You're right. I do that in my morning subscriber video. This is an overview. This is not me telling you go out and buy here, sell there. I'm not bashful. If you know me and you watch me, you know that. But I'm going to be paid for that. I'm like a doctor. I want to be paid like a lawyer. I want to be paid like a bartender. Pay me for the drink, whatever it is. That's where I do it in that part. If you haven't tried it, it's free. So that's my answer to those. But I do talk momentum here. I was just watching Kramer do some stocks, couldn't be 10 minutes ago. And what was he talking? RSI, MACD. I like slow stochastics better than both of those. I think it's a better indicator. When we take a look at what gold did, we had the pattern of lower highs. Now we have the higher lows. I wanted you to see everything right here. You ran into the brick wall right where you should. When you take a look at the gold-silver ratio, what do you got? Nothing. Now, I want to come back to this chart, by the way. You also worked out eventually of having an embedded reading here. You had a combination of things. You have an embedded reading. You have that reversal off that move. Both numbers say you should typically get to the 18-day average. The problem here has been you're fighting right in front of the Fed, which makes me always a bit cautious, more so than I maybe should have been, but that's where that came out. In the gold-silver ratio, it still favors gold is stronger than silver for the time being. Get the number difference under that 65.57 and it changes. So where's silver? Still in a downtrend, but in a stalled downtrend. You do have the pattern of lower highs, but you also have higher lows. We've seen the 100-day average hold. I told you that I wouldn't be surprised if the 100 and the 18 is what the market fights between. Momentum is corrected, past tense, in oversold condition. So now the question is, will the Fed tomorrow set this market on a trajectory? Any close in this market up and over 26.47, I want to say it right now, right here, this number, 26.47.70, I will consider bullish for tomorrow, a close over that number. In the copper market, I have been looking for the Bollinger Bands to wrap their arms around this price and start going sideways. The process has begun. I think you're through narrowing in. I think you're now at the point where the market's determining in the way that it's trading where those Bollinger Bands have narrowed into and where they're going to stay. Momentum is flat. The trend is up. Yes, you have higher lows, higher highs, bias down. It is a consolidation phase. This is where you get hurt if you're trying to guess what the next trend is be. If you're going to guess, let it do its setup and be in that trend and pull out of it. Don't just guess what it's going to be. In the platinum, you're in an uptrend. You have higher lows, higher highs. This is the first close over that 18-day average. The market in terms of momentum, unfortunately, it got overbought. Any reading that's over 70 is overbought. Now, during the day, it can correct on pullbacks. Should it get to the 18-day average at 1201.40 at $16 lower, it probably won't be overbought. Where would the pros be looking at the market? I think that's the number, and I think they don't want to see 1172 taken out. If you took out 1172, that would not turn the trend down, but it would stop the uptrend. Where's the upside target should the market keep going? Well, potentially it could be 1278.10, but there's another factor in here called a window envelope. I show that in the morning subscriber video, and it'll match this number up here, just so you know. So that'll be probably before that number where the resistance is. In the palladium market, this is what you call one of those vertical price rises. If you don't come out at those Bollinger Bands when they give you that opportunity, be it long or short, remember, why do I say on the long side you're coming out there? Because I'm assuming you're with the bias of the market, it's up. Assuming you're with the bias of the market, it's down. I don't care what your technique is. I don't care if you're long or short. I care that the bias is down and that's the target. Bias is up, that is a target. Got it? That's how I view it. So in doing that, I see you're overbought, you're there, you're not trending. The market's made a statement, though, doesn't want to keep getting under these lows back here. That is also an important task. In the dollar index, you are overbought in an uptrend, and you're getting a crossover. Do you see how the 18-day average of closes closed over the green, which is the 100? So you had a bullish momentum crossover today. You violate that if you close back under these numbers. So that would not be good. When you get a crossover, it is not uncommon for the market to take off and make a challenge for the most recent high. We'll see if it can do that. I don't like that it's overbought. I don't like that you'd have to tomorrow go into the FOMC. As you can see, I'm fearful of that, and you'll find me to be that way on each time a major report comes out or a major event. There are times the unemployment report becomes the big event. You watch it. Today I was watching markets at different times on pivot points. Now, if you think traders that are going in and out during the day aren't looking at these, you'd be very, very mistaken. They do. I learned it from floor traders. There used to be services on the floor that would even sell these numbers. They're called pivot points. We still do it, in fact, at Linn. So you can sign up for them and you get them every day sent to you from the evening. But it's support resistance, but I changed it. I tie into it momentum from the slow stochastic. I created a free, the word is free, 3-part video series. You just go to our website, as you can see here, free offerings. And if you want, take me up on my challenge to you. Take a look at the research we have. If you haven't tried it before, I think you'll find it interesting. You'll hear more from me shortly on the online course. I'm making great progress. Take care.